Good morning, it's Jonathan Barrett with the morning debrief. It's the 11th of August, the time is 8:02. Disappointing night on the Dow last night, no doubt about it. France was put on credit waiting, was a credit watch. Chances are that they were going to lose their AAA spot, just like the US. Societe Generale came out and said, no, that wasn't correct. We got some support from that, but the market in the States just peeled back. Investors sort of losing confidence. Gold continues to shine, record high, closing at 1,800. So quite aggressive move on that front. There seems to be nothing stopping it. Interesting to note on the gold market that that margins are increasing on it. There is also that risk similar to the silver market that we could get a bit of a concern. Anyway, stay close to it. We'll keep you posted if in fact we hear anything to the contrary. Okay, I've put this up, the Bloomberg, just so we can have a look. As you can see, there's a little bit of interest in Citi and Bank of America fall. But when you look through the news headlines, and we'll just go through it. When you look at through the news headlines, you can really start to get a sense that central bankers are race to protect growth. You've got that issue. There's quite a lot of news out there that's really pushing the market. Emerging market stocks priced from profit number signal bottom to some people, which is good. But at the end of the day, it's all quite negative at the moment, and I guess we got to see what Bernanke can pull out. There's not a lot of tools that Bernanke actually has left in his tool bag to help the market. But as I said, SocGen denies rumours about credit problems. There's quite a lot of news out there at the moment. Let's just have a quick recap across the market. Dow, as we know, was down 519 points, 4.62%. S&P was down 4.4%, and the Nasdaq was down 409. The top 50 in Europe down 6%, FTSE down 3%, CAC was down 4.5%, and the DAX was down 5%. Like close to the home, our market also smashed down 100 at 3,995, and expecting lower prices today. One thing to note in Australia, though we do have the unemployment rate out today, the market is expected to be steady at 4.9%, but there are concerns once again on this confidence. This confidence in the market will take some time to rebuild, not just in Australia, but around the world, as equity prices continue to slide. Okay, let's just have a look at around the traps, what's actually happening there. I guess here you go with first of all, I got gold up there. Gold looking to push through to new highs at the moment. 1,800 is where it's looking at the moment. Just keeps on going. I think the expectations are for higher prices. There is more of a contagion out there that people are worried. The trend at the moment within these markets is that they do just take it higher when Asia comes in. That's what we're seeing, and I think the same will be the same today. US dollar steady, but a little bit stronger. People seem to be flying towards treasuries. So we have to see an eye on that. US dollar slightly better bid, 74.90, 75. There's that big move there from that low. Once again, US dollar in a tight range, and I think expectations are for that to continue, and also to see that market, US dollar, remaining relatively better bid. Steady. I mean, what else can you actually fly to at the moment if it isn't the US treasuries? Although the yields are suffering, it seems to be where the safe money seems to be going. To that and gold. Okay, on the Aussie dollar, very volatile, 105.50. As you can see, that's been the daily chart. The volatility continues there. Not quite sure how to play it, but as you can see, up to 104, then back down to 101.50. Look, all under pressure. There's no doubt about it. The market's going towards dollars. Interesting on the dollar yen, 76.75 after that big round of intervention we had. A little bit of recovery there. Expectations, I think, are for it to trade back up again on dollar strength. Let's see if we get some intervention again. But as we said, the central banks often win when these sorts of things happen. Silver, good to see a little bit of a lift in silver. There we are off those lows. I still can't work out why silver was down and gold was up, but anyway, that's the way it works. Crude oil, 81.36, just steady on those ground at the moment, very volatile. Need to see a break above 83.20 in order for that to continue. Copper under quite a lot of pressure, 388. There we have it. Was looking okay, but look, it's under pressure, I guess, as it's a primary input. As we've mentioned before in quite a few things, I don't mind this occurring because if anything, that means it's cheaper to pass through the economy. So quite happy with what's happening on that front. Let's have a quick look at the Dow and the local market. The Dow, as we know, it's already down 39 points on the futures sessions, and that's been that sell-off there. Still haven't reached those lows, so not until we get a breakthrough 10,420 can we suggest that a low isn't in place. But if you trade in the range, that's the lower end of the range from which you can look at. Having a look at the local market, the SPY 3,994. Now that local market has been hit. I think it is unjustified, and there's still good value around here. The question is, at what level do we find we can buy back in at? Look, I think if you do get that dip, 3,900, somewhere like that, even though I think it's worthwhile having a go. More long-term stuff. Remember, just take a little bit of a nibble. This is all scaremongering with what's happening. So, and it is a concern. As I suggested, it's something we've just got to follow through. But as I said, the Australian market is far better placed than its rivals in Europe and its rivals in America. So, so if anything, just see what happens there. But we do like it. Okay, as I mentioned, towards the week, the big data in Australia is that unemployment, and that's coming out. Here we go. Today, an employment change, we expected up at 10,000. The rate stays at 4.9, and expected full-time employment to remain pretty muted, and same with part-time participation rate, steady at 65.6%, so that's not too bad at all. Just looking at not a lot out in the States, so I think the market will freely trade around. Let's see how that all operates, but it's still quite volatile. I guess it is quite hard today as to what happens. As we've mentioned when all this started, lower the position size you're actually trading because that's the most important thing in order to keep your powder dry. Look for those assets which we feel will be solid, and you're looking for long-term growth here. You're not looking for any short-term because the volatility is quite hard. That short-term will be around and about as we speak, and it'll be quite whippy. But that's it from me. Good luck today, and feel free to give us a call if you've got any questions. And bye for now.